All right, let's get right into it. Google's parent company Alphabet is pulling a financial move that we just haven't seen in the tech world for decades. They're issuing a 100-year bond. Yep, you heard that right, a full century. It's basically a bet that they'll not only be around, but will be dominating for the next 100 years. I mean, just think about that for a second. Would you bet on any tech company to last that long? Remember the giants from just 20 or 30 years ago, the ones that seemed completely unbeatable? So many of them are gone or just a shadow of what they once were. And yet here comes Alphabet, asking investors to put their money down on Google still being a titan in the year 2126. The sheer boldness of it, that's really what this is all about.
So why do something this audacious? Why now? Well, it all boils down to one thing. They are gearing up for the AI arms race. And believe me, the cost of winning that race is absolutely astronomical. We're not just talking about writing some clever code here. We're talking about building the massive physical foundation for the future of artificial intelligence itself.
Get a load of this number, $185 billion. And that's not for a decade. That's what Alphabet is planning to spend on capital expenditure for a single year, 2026. This is just a historic, mind-boggling level of investment with one crystal-clear goal: to win the AI revolution, period.
But spending $185 billion comes with a pretty massive trade-off. Just look at this. Analysts are projecting that Alphabet's free cash flow is going to absolutely plummet. We're talking nearly 90% in just 1 year. Now, that might look scary, but it's not a sign of weakness. No, this is a very deliberate, very strategic move. They're sacrificing short-term cash for what they hope is long-term, unshakable dominance.
So where's all that cash going? Well, it's not just for buying more servers. No way. We are talking about building entirely new, next-generation, high-density data centers, all tailored for their Gemini AI. It's for developing their own custom processors, like the Willow project. It's for pouring money into cutting-edge robotics, and they're even funding the ultimate moonshot, quantum computing. This is a full-stack, soup-to-nuts investment in what they believe is the future. Okay, so to fund this insane spending spree, Alphabet is turning to a really fascinating and pretty rare financial tool. So let's break it down. What exactly is a century bond? A century bond is basically the ultimate vote of confidence. It's a loan, but for 100 years. Think about that. You're asking someone for money that you promise to pay back in a century. Usually only incredibly stable governments or absolute blue-chip giants, the kinds of institutions you just assume will be around forever, would even dare to try this. It's a massive statement about your own permanence. And this really puts it all into perspective. By doing this, Alphabet is joining a very exclusive club. You've got cultural icons like Disney and Coca-Cola, industrial titans like IBM and Ford, and then you see that name? Motorola, the last major tech company to try this way back in 1997. Tuck that name away, we're going to come back to it. So who in their right mind is buying these things? Who is on the other side of this 100-year bet? Well, it's not your typical stock market trader, that's for sure. It's institutions that think in even longer timelines than Alphabet. We're talking pension funds, life insurance companies. These guys have to pay out claims 50, 60, even 70 years from now. So for them, getting a steady return from a company like Alphabet for 100 years, it's the perfect way to match up their long-term promises.
Okay, now this is where the story gets really, really interesting. Because while this move screams confidence, there's a ghost in the closet of that century bond club that serves as a huge flashing warning sign. Just look at this parallel. It's kind of spooky. Back in '97, Motorola was king of the world, a dominant force in tech, a brand that was actually bigger than Microsoft's at the time. They were so confident, so sure of their future, they issued a 100-year bond. Sound familiar? It is an almost perfect mirror image of Alphabet's position today as a seemingly untouchable tech giant.
And boom, here's the punchline, courtesy of Michael Burry, the guy from The Big Short, from the absolute pinnacle of corporate America down to the 232nd spot. This is what can happen in tech in just a couple of decades. A giant can be completely humbled, and suddenly those 100-year promises look, well, a little shaky.
But Burry's warning gets even sharper. He argues that the threat that AI poses to Google's core search business, the engine that prints all their money, is potentially even bigger and more existential than the disruption Motorola faced. So the stakes for Alphabet? They might be even higher.
So you have this stark warning from the past.
Yet why is the market falling all over itself to lend Alphabet money for a century? Well, it's because something really fundamental has changed in how we, and the markets, view these massive tech companies.
Just look at this demand. It's insane. For a recent $20 billion bond offering, Alphabet got over $100 billion in orders. That's more than 5 times oversubscribed. This isn't just confidence, it is a total feeding frenzy. The market is basically screaming, "We believe in you, the Motorola story be damned." And this quote right here from an analyst at eToro just nails it. The market is starting to see giants like Google, Amazon, and Microsoft not as these flashy up-and-down tech stocks anymore, but as essential infrastructure. Think of them like the new utilities, the digital railroads, the power grids of the 21st century.
And that's really the big takeaway here. Being able to successfully issue a century bond is like graduating to a new level. It means the market believes your business is so entrenched, your cash flows so predictable, that you're less like a normal company and more like, well, a water company, or even a small, stable country.
So all of this brings us to the ultimate question, doesn't it? Alphabet is making this colossal, multi-generational gamble. On one hand, it has the full, roaring support of the market. On the other hand, the history books are filled with the stories of fallen giants.
And this table just lays out their choice with total clarity. They are consciously prioritizing investing in AI leadership over having tons of free cash flow right now. They're choosing long-term dominance over immediate returns for shareholders. And they're trying to secure a competitive moat for the future instead of just crushing their quarterly performance numbers. It's an incredibly bold, clear-eyed strategy.
And so, we end right back where we started. 100 years from now, when this bond is finally due, what is Alphabet going to look like? Will it be a timeless institution like Disney, something that's constantly reinventing itself and still a huge part of our culture, or will it be a ghost of its former self, another cautionary tale, another Motorola? The $185 billion bet has been officially placed, and now the century-long wait for the answer begins.